welcome back to Mondays with Mo. Opening up a new criteria or category of management accounting for our level 3 students. Continuing from our last year's Mondays with Mo session again. This one, it's going to be something unique. We're going to be doing different questions, what we tried last year. And then also it is definitely going to help the students who are doing the AQ 22 qualification for their full accounting qualification called Diploma in Accounting. On this Diploma in Accounting, you have 4 units there. You have one financial account unit called FAPS, which is the financial accounting preparing statements. You have one tax unit, which is going to be your tax processes for businesses, which equivalent to those 2 units, you will be achieving something called AAT bookkeeper, qualified bookkeeper status, which is AATQB. But after you've done those 2 units, you have 2 further units, which is one of them is going to be your maths unit, which is management accounting techniques, which allows you to students to wade into the other side of the accountings, where you're going to look at what is the future accounting looks like, how we plan for the future. And then also you have one unit called the business awareness. And the business awareness is more of a technical, this is a major unit where you'll be tested with your spreadsheet skills, namely Excel. So therefore, I implore you, if you haven't done anything to do with the spreadsheet or Excel or anything like that way, I would totally recommend you to find some resources online, whether you can get it for free from some like online the course providers, or log into like Microsoft. They may have some teaching courses there which allow you to learn a bit of a spreadsheet. But I'm pretty sure if you got this far in accounting, your spreadsheet skills should be adequate for this level. But then it's also the expected from you. You need to get to kind of an intermediate level, not to the expert Zen level now, is at least an intermediate level you'll be expected to achieve. So here on this particular unit, we're going to look into management accounting techniques. The purpose of it, we're going to look into how we understand the principle that underpin the management accounting, learn techniques for dealing with the costs and revenue, learn techniques to aid decision making, learn how to monitor cash flows, and appreciate how spreadsheet can aid management accountants. You have to remember as well, this is to do with future. That means how you're going to be progressing your business into the near future and a long future. So here in the exams, this is how your exam is tested. They will be testing you in various different areas. All of them together, it should come to 100% there. I think this one supposed to be the last, the PowerPoint. This part here is cash management. It's going to be only 10%, not 15%. And then it has 6 tasks in this exam, where you have the first 4 will be computer marked, which is going to be something you fill in the boxes, like you do the numbers and then you choose true or false, yes or no. So questions like that way. And then also you have 2 questions at the end of it. They will be your spreadsheet questions, which you have to open up Excel while you're doing the exam, because when it comes to that 5th question, the computer automatically will open Excel for you. So on there, you have to make sure you do not go to any other windows. If it open Excel, just stay in there. You can refer your questions on the side there. You can split your screen. You probably have a technique there. You can press Windows and the left button. What it does, it splits the screens into 2. So that means you may be able to have the question on one side, and then you have the spreadsheet on the other side, and you'll be able to work on both questions and your answer at the same time. And also conveniently, when you finish that question and if you press answer, the spreadsheet itself will automatically save and will upload to your answer server. So like if you go to the AAT server, the answer is automatically uploaded there. But you have to remember, you can also go back on that same question. And then if you press the edit button, the already partly completed or already fully completed Excel spreadsheet will open back up again, and you can make any amendments there, and then you can press the answer button again. We will go through that in your management accounting techniques exam, which I have uploaded some videos of it online. Okay. And then those two questions, they're equal to somewhere along 26 marks out of 100 or 28 marks out of 100. And the first four questions will be like 72 to 74 marks equivalent. So therefore, you need to make sure you excel on both sides of it to have a reasonable chance of passing your exam. Okay, some students say, no, I'm not really good with Excel. I'll probably take my chances. That means you have to be absolutely perfect to pass that unit. So the first thing we're going to look at today, guys, is about cost classification, how you classify cost. So when I'm going to look at that here, first time I hear about cost, what is the meaning of a cost? What is the impact it has on the business? It costs something means, cost means what, for me to run something, I need to pay for it. That'll be a cost. It's going to cost me. I have different functions there. For example, we have either by element, you can either do by function, either by nature or behavior. All four of them have unique kind of characteristics here. So we start with what we call the element. So if you're going to look at that here, what is an element? Element is the absolute basics. I normally usually show something to my classroom full of students. I'll start drawing up something called a periodic table. Probably you heard about it from your science classes when you've done your GCSEs. What is a periodic table does? What it does, it diversify every single element on Earth. Elements means the atoms, or what is the name of that particular element there. So we have hydrogen, helium, carbon, like that way, nitrogen, oxygen, anything you know, they have a unique place in that periodic table because it has been clearly classified. And you also look at the whole living world, every one of the organisms, we have a classification for them. They have a scientific name. For example, for human, you have Homo sapiens sapiens. So like if I'm going to look at a domestic cat, we call it Felix domestica. Everything has its own name because they are unique. Similarly, in accounting, there are three elements. First one of them is going to be called materials. And then you have labor, the second element. The third element is going to be overheads. So every cost you aware of can fall into any of these three. It can be easily characterized by these three elements. So if I'm going to look at a certain scenario, we'll see some questions later on. If that doesn't fall on either material or labor, it has to fall on the third one as the overhead, because overhead covers everything else apart from material and labor. The next one is whether it's going to be nature. It does show whether the particular cost has a direct impact on the production or it does impact it indirectly, because something direct means it is involved in there. That means it changes when the production changes. So any direct cost involved with the business, it is something we're going to look at it. What happens if that particular activity changes? The direct cost will impact there. What is the indirect cost? It is impacting there, but it does not impact directly with the production. That means if the production changes, the indirect cost, it's still there, but it does not change. We'll see some examples later on as well. And then the third one is by function. You can have three functions or sometimes four functions. First one is the production. Second one is selling and distribution. And third one is administration. Sometimes you get the fourth one as finance. Okay, so just be careful when you get administration. Finance can fall under it sometimes. Okay, so when you see that, you just have to exercise some sort of a kind of due diligence, see what are your answers are. If you have only three, then it's fine. If it's not three, when you have all four, just have to be wary of what is the finance. Finance is most likely to be what we call the borrowing cost. Any cost attributed towards borrowing money, like an interest you pay on loan, it's going to be called a finance cost. Okay, we'll see some examples in exam styles questions when we get to that point later in the unit. And then the last one is something called by the behavior. The behavior is the one get tested mostly in the exams. The first three are something very usual. The fourth one is seldom checked. The first one is the variable cost, fixed cost, and semi-variable cost. Please remember, when they mean by these costs, they're talking about the total cost of all your that particular cost type. Okay, they're not talking about something called unit cost. Unit cost, I'll explain to you later how that works. So if I'm going to put that here on a graph, the graph will look like for the total cost for when it comes to the variable cost, it increases as the activity level increases. That means when you have zero activity, your variable cost will be zero. But when you have more and more activity increasing, what will happen to your total cost? It keeps on going up. That means every one of that items, like when you're going to do the production, every particular product will have a constant cost per unit. That means here, if I'm going to find the average cost per the unit, every one of that unit, doesn't matter whichever the activity level is, all of the units shares one cost there that will be increasing. For example, if there is a variable cost of £5 per unit, if I make zero items, it will be zero cost. When I have one item is £5. When I make 10 items, it's going to be £50. When I make 100, it's going to be £500. But when you do 500 units, the cost per unit, it still remains at £5. So please remember, the cost per unit is constant. I won't use the word fixed here. It is constant. But when it comes to the fixed cost, it is the total cost. It does not change when the activity level change. Can you see here? The total cost is not changing at all when the activity level is keep on increasing. For example, when you have zero items produced, you have a particular cost there. It does not change even if you produce 1,000 items or 100,000 items. It could be something like a rent for your factory, because you pay that cost regardless you make any items. Yeah. So when I'm going to look at it here, I make zero items, I have to pay the rent. But if I make 1,000 items, I still have to pay the same rent. Therefore, the total cost does not change. But what happens to the average cost per unit? The average cost per unit, it reduces as you more and more units you make. The units now share that total cost among them. So if I say here one item, if I say £1,000 rent, if I say 100 items, each units now only take £10 towards the cost there. So from 1,000 per unit, now it's come to £10 per unit because the average cost reduces. But on the other hand, we have the semi-variable cost, which is kind of a hybrid of both these fixed and variable elements. Can you see here at zero level, you have a cost there, and then the cost is increasing. It's basically a hybrid of these two here. What it does, this is the variable element of that cost, and this one is the fixed element of this cost. So when you get a semi-variable cost, if they ask you to find the cost at a different level, we have to look at a particular method called the high-low method. We'll see that later. Third one is the stepped fixed cost. Step fixed cost is fixed cost, but it changes once you reach a certain level. For example, you have a warehouse where you can store up to 1,000 units. So you will pay rent up to 1,000 unit, which is the fixed amount. It does not change that level. But once you start trying to store a one extra unit, when you come to 1,001 unit, your warehouse has run out of space. What do you need to do? You need to source another warehouse where you can store more goods. That means what will happen to the rental cost? It goes up, because that one, it is going to classify a second level of your fixed cost. So that means this will look like a step to you. That's why they call it a fixed step cost. So here, up to 1,000 items, your rent is 1,000. When you up to have 2,000, your rent is now £2,000, because you have gone over the first level. Now, if I'm looking at that one, we achieve the second level. Now, if you go into the 2001 items up to 3,000, your rent is now going to £3,000 pounds for it. So what happens there? The cost are increasing according to different steps. Now, go back to the high-low method. High-low method is looked like this way. We find out the highest and the lowest level of cost against the highest and lowest level of activity. We'll see a formula for that one later on when we do a practice question. So there, the data we use there to find two constant elements. Let's go back in here, check what are the two things does not change. Can you see here? When it comes to variable cost, the cost per unit, it does not change. So as the total fixed cost, these are not changed. In mathematics or in sciences, these numbers we call constants, like Planck's constant, pi. You heard about pi? 3.14. Those numbers are constant. They don't change. We can apply those constants at any formula. Same as in accounting with the high-low method, what we'll do, we'll find the variable cost per unit, and then from that we will find the fixed cost, the total fixed cost, and then once we find these two numbers, I will be able to apply the same information into different levels of production. So let's have a quick look at a question here, shall we? For example, this is the classification of cost. So they're asking here, Walter is the owner of a taxi company. How would the following cost be classified? So you have a driver's wages. Normally, a driver's wages will go as some sort of a fixed cost in other businesses because it is nothing to do with the production. But Walter's company is a taxi company. Therefore, the taxi company pays the driver's wages. It increases with the number of rides they take. That means how many miles they do. So the wages is in this scenario is going to be variable. Why? Because the number of rides the drivers take or the miles they do, that will be the deciding factor there. That will increase. How about the fuel for taxi? It is also same because here it will be variable. What happened to the insurance for taxis? What do you think about that one? Insurance for taxis is going to be what? Probably can kind of say it's fixed. It does not change. But you can also argue about the driver's wage. You probably can think about it. What if they're salaried instead of having a wages? So in that scenario, the driver's wages can be fixed or it could be step fixed because you have that option there as well. If they have salary, this will be a fixed. But when I say wages, it's going to be depending on how many hours they work or how many rides they take or how many miles they drive. So it's possibly there will be more clarification needed on that one. But when it comes to the vehicle tax, what do you think about the vehicle tax? Vehicle tax is also possibly it's going to be a fixed. It could also be a stepped fixed cost. It could be. Why? Your taxes can change in the level what you do. Yeah, it could not be, I can't think about it can be a step fixed cost here. It's not an exactly real good example. I have a further example. We can look at it a bit later on though. How about Walter's salary here? Walter, because he works as the owner, so that means he pays himself a salary. That salary can be just a fixed amount. But Walter, if he decide to pay himself some sort of an additional amount like bonus, that could be a semi-variable. If he only gets a fixed amount, so if they say only salary, if they do that, but if he takes salary plus bonus, that could be a semi-variable cost there. So we can look into that more importantly. When it comes to those questions, they will give you the numbers clearly. So we'll be able to differentiate between those types of questions there. But now let's look at this question here. This appears in the exam a lot. I've seen the students have come and saying to me, I had this question in the exam. So they give you 4 different types of cost here, it could be anything because here they use material, labor, rent, electricity, but sometimes they could just say cost one, cost two, cost three, cost four. We need to find out whether what type of cost these all represent. The first thing is they're saying here material. What you can see here, the material cost, it is changing with the level of production here. So if I'm going to say here, fixed, variable, semi-variable, stepped. Okay, so is it fixed? No. Why? The fixed cost, if I'm going to go back in there and then look at the graph here, the fixed cost says the total cost does not change. So it is changing here, therefore it's not fixed cost. Is it going to be semi-variable? I don't know. But it is definitely also not stepped because I can't see any levels. It changes intermittently like that way. So it is also not a step fixed cost. It could be either variable or semi-variable. What we can do in this scenario is to find what is the other element we know of. Let's find the unit cost. So here, let's look at the first one, the unit cost. So here, material unit cost. So let's say here 7,500 divided by 1,500, it gives me £5. Can you look at the next one? 12,500 divided by 2,500 is £5. You see, there is a pattern emerging there. 17,500 divided by 3,500. Again, it's £5. The last one, 27,500 divided by 5,500. I have £5. Can you see here in this scenario, the unit cost has remained same. Let's go back in the graph again. Can you see the unit cost is remaining constant? It's the only one cost will be, it is the variable cost here. So it is not semi-variable cost. It is the it is a variable cost here. Now let's look at the next one. Labor cost here. It is £12,000 and these two levels, and suddenly it's £24,000 in these two levels. It could be I'm paying a supervisor to supervise units up to 3,000. I pay for one supervisor, but when your level changes after 3,000, I'm end up paying for another supervisor. Now that supervisor can cover units up to another 3,000 unit, which is among these two levels there. So it is definitely a stepped fixed cost because it cannot be a fixed cost. Why? The fixed cost supposed to remain same at all levels. In this scenario, it did not change for the first two, but it did change to another level in the second, so third and the fourth levels. Therefore, it is a it's a stepped fixed cost. The third one is the rent. Can you see the rent here? It did not change in all three levels. It's a good example of the fixed cost. The fourth one now, can you see the value of your, the total cost is going up. So it is not a, what do you call a fixed cost. It is not a stepped fixed cost, but it could be either variable or semi-variable. But let's check my unit calculations here. So here, when it comes to electricity, I have equal to 16,750 divided by 1,500. It is £11.17. I have 21,250 divided by 2,500. I have £8.50. Can you see here? The value comes down. The total cost is going up. The unit cost is coming down. Let's say here the next one, 25750 divided by 3,500. It gives you £7.35. And the last one is going to be 34,750 divided by 5,500 is £6.32. So can you notice what is that doing to you? It is basically the reducing the cost as you go along. It is because the semi-variable cost has a fixed element and a variable element. In this scenario, that way the total cost is keep on increasing, but the unit cost is keep coming down. Okay, let's see whether we can use the high-low method to identify what is expected of you here. Okay. So there are two questions. The first one is the company incurs the following cost at the activity levels herewith. They're giving you these activity levels here. Using the high-low method, what is the variable cost per unit? So here, let's put out the formula. The formula is going to be equal to high cost minus low cost. Okay, so let me get rid of the equal sign because it does not work. You're going to divide this number. So let's say here, yeah. So here, high output minus low output. Okay, so here, high output, low output. Okay, so here, if I'm going to put that in a formula, let's do the formula as such. Highest cost is 40,000, 400,000 minus the lower cost of 250,000. And I'm going to divide this cost by the difference in units. So I'm going to quickly 1,000, 10,000 minus 5,000. Why I'm doing a brackets, you may ask. In the Excel, if you don't do the brackets, it does not follow the BODMAS rule. The BODMAS rule is brackets, others, division, multiplication, addition, and subtraction. So when you don't put a bracket, it assumes the formula relates to the number beforehand. So be careful with that, guys. In this scenario, I need to put brackets in there. So the variable cost per unit, it comes up as this one, 30 pounds variable cost per unit. Okay, so this is the amount, and I will be able to apply this variable cost per unit at any level to find what is my fixed cost. For example, if I'm going to look at it at 5,000 units, yeah, I have that. Oh, okay. At 5,000, because at sign is equal to formula for some reason. At 5,000 units, let's say here, what is my total variable cost? Total variable cost is going to be what? 30 times 5,000 is going to be 150,000 pounds. If my total cost is equal to 250,000, what is my fixed cost? Fixed cost is going to be the total cost minus the variable cost. It gives me 10,000 pounds now. So that number and that number, they are both constants. They don't change. Let's prove it whether it works on the other level. Let's check at the 10,000 units. So at 10,000 units, let's do the same thing here again. Let's find out what is my variable cost. Variable cost here in this scenario, 10,000 units times 30 pounds, which will give you 300,000 pounds. My total cost is 400,000 pounds. What is my fixed cost? Fixed cost is going to be this minus that. Again, it gives you the same amount. So can you see here, these two figures here, these will be my constants. I can use this number at any level. Now let's look at the same scenario here. We use for that same calculation. The following data relate to the overhead expenditure of contract cleaners at two activity levels. They're given you, these are the overheads, and then the square meter cleaned on these two scenarios. They're asking you, using the high-low method, estimate the overhead cost if 16,200 square meters are to be cleaned. So let's do the same formula again. So let's bring the formula up here and put that down now. What I need to do, I need to find what is my the higher cost, 83,800 585. minus 73,950. And you're going to divide this number by the activity levels difference, which is 15,100 square meters minus 12,750 square meters. It gives you £4.10. This is going to be my variable cost per unit. Can I apply that at any level? So let's say here, I'm going to quickly do this. I'm going to go back here and let's say here, I'm going to apply to one level only. I'm not going to be bothered about both levels. Let's say 12,750. What is my total variable cost? So the total variable cost is going to be that times 12,750 square meters. This is my total variable cost. What is my total cost? 73,950. And that gives me a fixed cost, this minus that, which is going to give me 21,675 pounds. So these two will be my constants, which I can use to calculate when you have a new level to do this here now. So can you see they're asking you, what if you do 16,200 units, and I'm going to find my total variable cost. Total variable cost will be that times 16,200, which is 66,420 pounds. The total cost we don't know yet. So let's say this is the fixed cost and we'll do the total cost. Okay, what is the fixed cost here? Fixed cost is 21,675 pounds, and the total cost going to be this plus this in this scenario. It's 88,095 pounds, and we have an answer A. That will be the right answer here. So be careful, guys, when you get a different level, you still have to find what is the total variable cost, but you can use the fixed cost you already calculated in that formula to find the total cost, because that's what they're asking you now. And that will conclude that part. Now, let's go into the same way. Let's find out what I'm going to do if I get a question like this way in the exam. So in this scenario, this question is all about variable cost and what is the semi-variable cost. And then also there is a total cost there. So let's see here what we expect to do. It says there, Aquaris Limited has prepared a forecast for the next quarter for one of its small metal components, XET or XET. The forecast is based on selling and producing 120,000 units. One of the customers of Aquaris has indicated that it may significantly increase its order of level for the component X for the next quarter. And it appears that an activity level of 13,000 units and a 15,000 units are both feasible. Semi-variable costs are included using high-low method. So that means we have to find out, if we do 20,000 units, the semi-variable element will be 27,380. So they have one element here. So let me mark it up. This is your one level. And they also given you another level of 20,000 units, and your semi-variable cost in that case will be 27,380. So what we need to do, if I have to find this one now, I need to make sure I have to find new level of production. So let me clear this. This is not right. Yeah, no fill. Okay, this is how it should be. So here they ask you to find out how to complete this table. So in this scenario, I'm going to use my Excel skills to find out how to fill these boxes, because I know for a fact my sales revenue is 480,000 for 12,000 unit. So if I'm going to do for 13,000, what I need to do, I need to make sure I copy this number, divide by that number to find the sales revenue for one, and then times it by that number. So let's do a formula. This divide by that, which give you 40 pounds. There you go. That is the per unit, but I don't want that number. I want what is the total revenue for 13,000 units, which is going to be 520,000. I can do the same formula again though. This divide by that times by 15. That which should give you 60,000 or 600,000 there, yeah? So that is fairly straightforward. But now let's look at the variable element. What do you know about variable element? It changes with the production. It increases. It does not stay fixed. So what we need to do, we need to appreciate that fact. We will do the same way we done a formula here. So in this scenario, I'm going to say this one is going to be equal to that, divide by that number, times that number. Okay. But what I'm going to do now, I'm going to do something called what is that? Absolute cell referencing. That means I can copy the formula and paste it downwards, but it will not change my answer. So like if I done it here now, for example, it gives you 39,000 pounds. But when I copy and paste here, it gives me some sort of a odd values. What it does, it copies the formula downwards as you moving along. But I don't want that to be moved along. What I will do the same formula here again, but I will make this cell B1 and C1 as absolute. I press here the F4 button of my keyboards. And what it does, it adds the dollar signs in front of both the cell references for your column and your rows. If you done that one, what it does, it adds that particular cell reference into it. We call it absolute cell reference. Now, if I move that formula downwards, can you see here? It has now given me the right number. Now, if I'm going to look at it here quickly, can you see here? The formula didn't shift upwards or downwards. For example, here, it didn't shift downwards because it kept the same information as it is here. So let's do this one same way. But in this scenario, I'm going to do this. It's going to be divide by that number times by that number. But I'm going to press absolute cell reference for both of them. And then if I'm going to drag and drop for these two, and you can see the variable costs now changed from that level to that level. It has completely changed the numbers there. But now we have a semi-variable element to find out. Remember, guys, this is not level 2. So the technical level you expect to know, it's much more than what you know in level 2. So let's see whether we can apply that what we learned already. Remember, if I'm going to look at the high-low method, this is the formula. So let me bring that back up here again. So let's do that same way. The higher level is 20,000 units. The total cost is 27,380. So I'm going to say 27,380. Let me bracket it. If I don't do a bracket, it's the creature of habit. Minus that cost and divide this number by the number of units we have is 200,000 minus the 12,000 units. What it gives me, the variable cost per unit. Can you see here in this scenario, the variable cost per unit is £1. So this is variable cost per unit. So let's apply that at the 12,000 units. So at 12,000 units, total variable cost, in that case, is going to be 12,000. Excuse me. And if I know my total cost at that level is how much, we know the total cost is going to be how much? It's going to be equal to 18,380 minus 12,000. It gives me 7,380. So let's say here, I'll put that two numbers in this scenario. And here, 7,380. Okay. Now, what I can do here, my fixed cost is not going to be changed, isn't it? Fixed cost is always going to be that number. What about the variable cost? Now I know the variable cost unit is £1. So for 1 unit is £1, the total variable element in that case is going to be equal to that times whatever the number we found here, which is 13,000. And this one is again is going to be what? That times the total number of items you do there, 15,000. So that is what you're going to be. Like if I'm going to do now formula for my total cost, I'm simply going to press this number, which calculates all of my cost here. And same way, I'm going to move that over here. And what is that going to do to my profit? So I already have a formula. The profit is your revenue minus your cost, which is 310,620 pounds. Now, what will happen to it? It is increasing, but how your profit is per unit is going to come up. So let's say here in this scenario, let me drag and drop it. Can you see that profit now? He's going upwards. Every time you make another unit, your profit is going up. The reason why your cost per unit is now coming down because of this fixed element. Can you see this fixed element? At the beginning, it was shared by only 12,000 units, but now more and more and more units are now sharing it. Therefore, the cost is coming down per unit. Let's look at that here. The fixed cost per unit. More activity means more units are there. That means each unit takes more cost towards it or less cost towards it. So the total cost comes down. What will happen to your profit? It shoots up. Now, we finished that part. Now we're going to quickly look into the next section, the next chapter. This is going to be something called the types of costing system. So what we're going to do here, we're going to learn about what is the difference between absorption costing and what is that comparing to marginal costing. So see here, the difference between them is in this particular chart itself. If you look at that, you have sales, variable cost, production cost. And if you take away the variable cost from your sales, something you get a contribution. From that contribution, you take away your fixed cost, you get profit. But when it comes to absorption costing, your sales minus production cost. That means it can be fixed and variable cost included in there. And in that case, when you calculate this next level will be called gross profit. Now, what you learned from your financial accounting, you never heard about the word contribution before, but it's a hypothetical number because the contribution is something helps you to plan for long term. But we will see into that in further units down the line. But here, once we find the gross profit, you're only going to take away any non-production cost. That non-production cost will give you your profit. That profit numbers not necessarily will be same. It is since some of the calculation we do in the assumption there. So can you remember when I say production cost, we have to assume some of the production cost because if it's not sold as the part of cost of sales, the closing inventory will take that cost towards it. Therefore, that cost gets taken away from the cost of sales calculation. What it does, it goes to the next period as an opening inventory, and therefore it will result in higher profit. If you have a higher profit, what is the meaning of it? You end up paying more tax. And do you think which one is acceptable to HMRC? Absorption costing because of that, because it yields you more profit now than later. But in fact, either way you calculate it, you will still end up paying the same amount of or taking the same amount of profit because the only thing is you push some of the cost to the next level. If you do that to the next level, you will return higher profit now and then you get lower profit later. HMRC prefers you get the higher profit now, so you get to pay more tax now. If you're pushing the cost, if you don't push the cost, you pay lower, you return lower profit now. That means you pay lower tax. HMRC doesn't want you to do that one. So if I'm going to get a theory question will look like this. They give you uses just the variable cost to value your unit of production. Which one you think is just the variable cost? It is going to be the marginal costing. So let's bring that back to this particular slides here. Where it is. Yeah, on that slide, what is that here? Can you see? It's just the variable cost. If I say production cost, it may have fixed cost in there as well. So this variable question here, we're going to say it is the marginal costing. Complies with the accounting standard IAS 2 for the inventory valuation. It is going to be absorption costing. it is often used with conjunction with preparation of manufacturing account. Remember, when we're doing the manufacturing account, we do the production cost in there. So there is going to be your absorption costing, can be used in conjunction with the break-even analysis. And that is internal calculation. Therefore, it is going to be a marginal absorption there. It does not consider cost behavior when identifying cost. In that case, it's going to be marginal cost, because absorption cost, it does take the cost behavior when we're going to classify them, because here we have the semi-variable cost, it goes in there, okay? And the last one, it used the idea of contribution. Sorry, in that case is this one, sorry. Yeah, because to consider the cost behavior here, because the behavior is going to be either fixed or variable cost. Absorption costing, it does not care. It is going to be doing by the function. If I have any production cost, it goes as the part of my cost of sales. If it's a non-production cost, like admin or sales, will be done on the gross profit afterwards. So what they're saying here, it does not consider the cost behavior, it is the absorption costing. But if I'm going to look at the uses the idea of contribution to help to show the short-term decision making, let me see, yeah, short-term decision making, this is going to be the marginal costing here, because when it comes to short-term decision making, we learn later on the contribution is what we use to calculate something called the break-even point. Break-even point is where we neither make any profit or loss. That means we have nothing. We put our money, we made our money, and there's no profit whatsoever. We just covered our cost. That is break even. That means if I lose one revenue, I'm in the loss. But if I make one extra sales, I'm start making profit for myself now. Okay. So that is the concept we're going to learn later on. So let's see here. We have a question where we're going to learn about how the marginal costing and absorption costing look differently when it comes to calculation. Okay, so I have this question prepped up here. Let's have a quick look at that. It says here, variable direct materials are 12 pounds per unit. Variable direct labor, it's 15 pounds per unit. Fixed overheads, it's 120,000 per units. During the last year, the company made 20,000 units and sold 15,000 units for 50 pounds each. There was no inventory at the start of the year. Using the table below to show how much the profit and loss would appear under absorption costing and under the marginal costing. So let's do the marginal costing first. So if I'm going to look at here, my total sales revenue, can you see the total sales revenue? What is my total sales revenue is going to be? So if I'm going to say, if I'm going to sell for 50 pounds and I have got 15,000 units I have made, okay? 15,000 units I sold. I made 20,000, but I only sold 15,000 units, okay? So let's see here, what is my total revenue? The total revenue is 750,000 pounds. How much material it cost me? So if I have 20,000 times 12 pounds, it's going to be 240,000. The labor I have made, how much is the labor? It's going to be 12 times, not 12, 15 times 20,000 units. And then also the variable cost for the production, in that case, is going to be equal to that plus that. So the closing inventory. So in this scenario, what is my closing inventory is going to be? So I'm going to find out the variable cost per unit, that is going to be for 20,000 units. Yeah. So the closing inventory will be, so the closing inventory will be that equal to that cost divided by 20,000 times 5,000, because we didn't sell 5,000 units. Yeah. So it is come to 135,000 pounds. So the total variable cost in this scenario is going to be equal to that minus that figure. How much is the fixed cost? 120,000. So the total cost in this way equal to that plus that. And my profit will be that minus that. What is that going to give me? It's 225,000 pounds. But what is the key number here? When it comes to the closing inventory, it is only the variable costs. That means 27 pounds times 5,000 unit. Let's say here, 27 pounds variable cost times 5,000 unit. It's 135,000 pounds is the cost. I'm moving on to the next period. My whole of my fixed cost on the production itself, it was totally absorbed this year. This fixed cost of 120,000 pounds, I am using that this year totally, even though some of the products, excuse me, I didn't sell. That is why the marginal costing will return you a lower profit than absorption costing. So let's say here on the absorption costing side of it, let's say 50 times 15,000 units. No changes in there one. Material also, it's no change whatsoever. So here, I'm going to paste that same number now. But this scenario, we putting the total the fixed overheads in there. So the total production cost is going to be the sum of these three numbers. Now what we're going to do, if I'm going to find the closing inventory, this fixed cost is already absorbed in that particular production level. So let's say here, that number divide by 20,000 units we produced. Now times that by 15,000 or 5,000 because it's what left over, isn't it? Closing inventory. It gives you the closing inventory value of 165,000 pounds. That returns a cost of sales value of that minus that 469,000. So 495,000 now. What will be your profit? What happened to your profit is it gives you a higher profit, 255,000 pounds. Why? You may ask me why. It is simply the sum of the fixed cost now, it's moved along that 5,000 units. Now, at the moment, if I'm going to look at that here, my variable cost per unit in this scenario is going to be equal to 27 pounds. 27 pounds because it's going to be your 12 and 15 pounds. In this scenario, we got a different cost we call an absorption cost of that unit. The absorption cost is 66,000 pounds divide, so 660,000 pounds divided by 20,000. Each unit now carries a certain absorption cost. That absorption cost for that unit is 33 pounds because it absorbed the fixed overheads within the cost there. So when you get this question, you ask yourself that, oh, why that cost is now moved on to the next period. Instead of 27 pounds, we are moving now 33 pounds to the next level. So 4 pounds times 5,000 unit is 20,000 pounds there. It's not 4, sorry, 6 pounds times 5,000 units. And that is going to be the difference here, 30,000 pounds profit. Now it comes to this year, more profit now. But what happened next year? My cost is already high. Therefore, my profit is going to be coming down. But we'll not going to be doing consecutive yearly statements, but you may hypothetically think about similar one in this scenario. So let's say here, this question now, it's a lovely question as well. This is kind of a cost card kind of it. It accommodates both of the concepts you learned so far. Now this time they're going to tell you by single unit cost only. So they're saying here the variable cost, so direct material is 3 pounds, direct labor is 6 pounds, variable material overhead, so the production overhead is 2 pounds, fixed production overhead is 5 pounds, variable selling cost is 5 pounds. So there are so many variable costs there. And then on top of that, you have the fixed cost. Sales price of the unit of Royale is 21 pounds. Inventory of the finished goods at the start of the period was 0, but it was risen to 3,000 units by the end of the period. During the period, 3,000 units were sold. So what happens here in this scenario? We have made all the way up to 6,000 units. We sold 3,000. We have 3,000 in my stock. So they're asking here, compute the level of production in units for the period. So they're asking you how many items you produced. So if I sold 3,000 and I have 3,000 closing inventory, they're saying your inventory of finished goods at the start of the period was 0, but it's risen to 3,000 at the end of the period. That means we have produced altogether 6,000 units. So that task one should yield you an answer of 6,000 units. They're asking you here, compute the budget production cost per unit under the marginal costing. So if I'm going to say marginal costing, how would I do this? I need to find out how much is my variable cost. Variable cost, because they didn't talk about any other things here. So if I'm going to say selling price is 21 pounds. And the variable cost in this scenario is going to be 3 pounds plus 6 pounds plus 2 pounds plus 5 pounds. That is the selling cost as well. So it is 16 pounds. And then the contribution in this scenario is going to be that minus that figure. Okay. So what we now have in this scenario, minus the fixed cost. Fixed, oh, hold on. It's the marginal cost, isn't it? Variable selling cost. That could not be part of it because selling cost, I don't think that should be a variable selling cost. I'm kind of perplexed by this one. I'll probably have to look at it how they have done this answer anyway. So if I have to do a profit and loss. Okay, bear with this. I will stop doing this question. I'll move on. I will probably discuss that first thing on the next session. It might be useful because I have to go through what is the concept they have used here, because I'm not pretty sure, because this selling variable cost is something I have considered before. Okay, so bear with us. We will look into that bit later on, but let's look at this batch costing instead. Okay, so let's see here how this number works. So here, Delta Limited, a manufacturing business, uses both batch and unit costing as an appropriate in its production department. It has estimated that the following cost will be incurred in producing one batch of 25,000 units of product G7H1. So they're saying here, this is the cost per budget, sorry, per batch. So if I'm producing 25,000 units, if I have my direct material, they're asking you direct material, direct labor, variable overheads, and fixed overheads. And then you also have the other things there. So they're asking you, first thing is, what is my prime cost? Prime cost is your direct material and your direct labor. That's it. There's nothing else there. There's no direct expense we think about. It's not here. Therefore, it's only your direct cost. In this scenario, if I'm going to do a box here, for example, let's do a box here. Yeah. So let's do a box here. So the direct cost will be per unit. They're asking you per unit is going to be 62,500 plus 10,000, which is your variable cost or the direct cost. Divide this by number of units in the batch there, which is 25,000. It's £2.90. So I'm going to quickly change that to 2 decimals now. So I'm going to say here So I don't have to change the formats again. Next one, they're asking you, what is your full absorption cost per 1 unit? So when I come to absorption unit, it's going to be all my variable cost plus the fixed production overheads if I see anything there. So therefore, my fixed production overheads is going to be equal to 12,500, and all other variable cost we have there 7,500. So they all needs to be added on. So 62,500 plus 10,000 plus 7,500 plus 12,500, which is going to be my all of that marginal cost, so the absorption cost, and that number I'm going to divide by the number of items on my batch. Again, it's going to be 25,000. So it's going to be £3.70 per unit absorption costing. But when I do this same way for the marginal costing, I'm going to copy and paste that formula here. I have this direct labor here, direct material here, direct labor here, fixed production overheads there, variable overheads there, and fixed production overhead. Which one we take away here? Any fixed cost. It's just the variable cost when it comes to marginal costing. So we have 62,500 plus 1,000 plus 7,500 and divide all of that by 2,500 units. I will get £3.20 marginal cost per unit. Then they're asking here, calculate the marginal product cost of one batch of G7H1. So if I'm going to talk about the marginal production cost, again, this is going to be exactly what we have calculated for the marginal costing here. 6,500 plus 10,000 plus the variable overheads of 7,500, which is £80,000. But when it comes to full absorption costing, we'll do all the cost except this selling and distribution, because they are non-production overheads. So therefore, what we're going to do, we can do two ways. We can say 99,500 minus the 7,000. We can do that way, one way, you get the same answer. Or that number, all of it, plus the fixed production overhead of £12,500. So the marginal cost plus the fixed production overhead is going to be equal to, say here, that number plus 12,500, and it gives you that number here. So bear with us, please, guys. I'm going to see whether I can find the solution for what we are missing earlier. Just going to quickly pause it. Bear with us. Yeah, let me quickly go through where did I find that question from. Bear with us, please. Marginal versus absorption costing. So it is the question bank. Okay. Blank quotes. Management accounting techniques. Okay, got it now. Bear with us. Let me get back to that question now. Screen. Okay, got to the bottom of it because the question I missed the part on the top there. Probably that's why it is. Because here, the variable selling cost will not be part of the marginal and absorption costing. Why? That is a selling cost. If that is a selling cost, so let me just put a quickly highlighter here. This one, if I'm saying selling cost, that will be something applied after that. Can you remember when we done here on our formula again? Let's show you here. It is part of the non-production cost, or it is also part of your fixed cost, even though that is a variable cost according to them. Talk about the confusion they create for us. They're not part of my production cost. Selling cost is selling. It means it is going to be on top of what you've done towards the production here. So I should not involve that number there. Okay, so let me just quickly go back into my spreadsheet. So here, let's look at what we have now. Let me close the PowerPoint because otherwise it won't let me use the numbers. So the variable cost in this scenario, we have the direct material, direct labor, and the variable production overheads. And that gives you £10 contribution minus the fixed overheads. It should give me, which is your £5. So profit of £5 there. I think that's what it is. Give me a second. Yeah, it makes sense now to me. Did I just stop the sharing? Yeah, share screen. Got it. Okay. So here, they didn't ask you in that scenario. They just only want you to find the cost. They didn't want you to find any of these. They just want you to find what is your marginal cost. So in this scenario here, I'm not going to do the profit and loss statement. The marginal cost, when I'm going to look at it, is going to be your direct labor, direct materials, and then variable production overheads. So here it is going to be only £3 plus, hold on, £6, £3 and £2 here. Altogether, that will be £11. This is my marginal cost. And if I want to add something else to it, which is your fixed production overhead of £5, and that gives me the absorption cost. The absorption cost in that time is going to be £16. So these are the two things they ask us, and I just overdid it. I didn't want to do a profit and loss statement early as that time. So my apologies. I should have read the questions carefully myself. So these are the two calculations they ask you to make. You've done them now. Now you need to do a profit and loss statement. If I'm going to do a profit and loss statement, let's bring the format I had here. So let's say here, this is the format I will have. So let's bring that back up here. What are the things we can do? Let's do this. I need to add one more here, but we'll go along and check how it works. Okay, bear with us. I may have to change something here. Okay, so let's do the marginal costing first. If I'm going to do the marginal costing, the way we have to look at it, the sales price for one unit is £21 there. So therefore, my total sales revenue will be 21 times the 6,000 units I have made. I'm sorry, 3,000 units. Yeah. So I made 6,000, but I have only sold 3,000. Okay. So the variable material cost in this scenario is going to be for 6,000 unit I produce. So I will say here, made 6,000, sold 3,000. So let's say here, what is my variable cost for material? So I know for material is £3. It's going to be equal to 3 times the 6,000 units. Variable labor is going to be equal to £6 times 6,000 units. And we have variable production overheads £2. So that's going to be equal to 2 times 6,000 unit. So altogether, my total production cost, variable cost I'm talking about, total variable cost in this scenario is going to be adding all of them together. But half of them, it's not sold. So if I'm going to do here, what is my closing inventory? It's going to be sum of all of that number. Yeah, sum of that, all of that number. Now divide by 2 because it's only half of it. Okay, so what we have now is the variable cost sales. So here, variable cost of sales. Yeah, I will say here in this scenario, it is going to be, yeah, whatever we have left over. It is going to be left over half of that one. Okay, so variable cost of sale is 63,000. Hold on, where's that? £33,000. This is left over. If I'm going to take away closing inventory this much, and this is what is the variable, the cost of sales left over. My fixed cost, how much is the fixed cost here? The fixed cost are this fixed production overhead £5 and this selling cost of £5 as well. So every time I'm going to sell, think about it, this is going to change if I have more different items there. So how much altogether I have to charge as my fixed cost here? Even though it says variable, think about it as a fixed cost here. Okay, at the moment, guys, for the purpose of this calculation, think about this as a fixed cost. £10 times 6,000. So here, this is going to be equal to £10 times 6,000 units because that's what I have produced. So I need to take away these two numbers. In this scenario, what I'm going to get? This minus this minus that. What is going to do? Why it says false there? Okay, it's minus. I am having minus £30,000 profit. That means it's a loss. I have made a loss because obviously I haven't made enough money back. Because imagine that here, this is £21,000 total cost. And then £21 we are selling it for are not meant to make any profit. But since we move some of the stock to the next period, therefore, some of the fixed costs didn't get absorbed on time. It resulted in me having a loss. But if I'm doing absorption costing, it will look a bit different. So let's say here, this number didn't change, 63,000. 18,000, it didn't change. 36,000, it didn't change. Variable production overheads. This is what I need to do here. So let's bring this down. Fixed and I'll say here, variable and fixed overheads. Or I'll say production overheads. This is what missed out earlier. And how much is that in that scenario? It is going to be £7 times, how much is that going to be? 6,000 units. It gives you £42,000. So the amount we missed out earlier is this amount. So my total production cost in this scenario is going to be sum of that. It is going to be 96. So the closing inventory will be half of that one. So it's going to be half of that one is £48,000. My cost of sales in that scenario is going to be 48,000. But also I need to remember, let me insert something quickly. Insert sell down. So here my selling cost, how much selling cost I have here? The selling cost is going to be, I sold, hold on, here, I only sold, so I made a mistake here as well. So we'll get back to there in a minute. How many items I sold? I sold only 3,000 units. So 3,000 times £5, it is going to be that amount. So let's say here, that is my selling cost. Let's find the profit and loss. So let's say here, profit and loss is going to be your sales minus the cost of sales minus the selling cost. I have 0. So that number will be different. So let's find out what it is. So here, what are the fixed costs? I know the fixed production overhead of £5 times plus £5 selling cost per unit, which is only, we sold 3,000. We didn't sell all 6,000 units. Remember, guys, this is the £5 fixed production overhead for 6,000 units. But selling cost for £5, we only sold 3,000 units. So let's say here, okay, so now it results in £15,000 loss, because after 30,000 is a big amount of loss. We didn't have that selling cost this year. So again, this kind of a very confusing question. I think we have to redraft it slightly differently. The way have they done it, I thought it was okay, and I started it, and then I realized this selling cost part led me a bit astray there. So my apologies, guys, if I misdirected you at the beginning, but eventually we got there. I probably can check the answers for you. Let's see, where's the cap plan? I'll probably have the answers somewhere. Let's check it. Oh yeah, here you go. I have that information here. So when you're going to do the marginal costing, it does have the fixed overheads here, and then also the loss for the period. So the amount of expense we got up here is £15,000 loss, which is corroborated by what we have found out earlier. If I'm going to do a production absorption cost, and when you do the absorption cost, it has the same information, and it gives you a profit of 0. Many times the way they do it is different, because if I look at that here, I used the wrong template. That was my fault. I should have used its own template here. But most importantly, what you can see here, when you've done the marginal costing, when you have a closing inventory, you will have less profit or more loss. And this way, the accepted method when it comes to marginal and absorption costing, when it comes to accounting standards, if you want to submit this information to HMRC or for any other organizations, you must do the absorption costing method. You should only use marginal costing for internal calculation, where you don't have to submit it to anybody else. Okay.